Fantastic. Awesome. So, without further ado, welcome everybody to another presentation of the Rise Apartments. It's just another special webinar. And this time around, you're going to have our fantastic Chief Growth Officer and Head of Acquisitions at Excite Capital, Mr. Tenny Tulafari, doing the honors. Without further ado, I'm going to welcome the tenacious Tenny and let him take it off. Please go ahead, sir.
Thank you, my chairman, and thank you everybody for joining. And happy Memorial Day, everybody. Today, we wanted to give it a little twist on how we do our presentation today, where we're going to be, opening up the curtain a little bit for you guys to see the back end. I know a lot of you could be anywhere today, but you decided to spend this 1 hour with us. And the one thing we're going to assure you all that's joining today is you're going to learn a lot about, what we've done in the past as a company, what we're doing currently, and how after this presentation you'll be able to be a part of what we're doing here at Excite Capital. The essence of what we do is, is pretty straightforward, giving folks access to assets that normally they don't have access to. And today we're going to be sharing with you all the practical, the back end evidence. You guys are going to be seeing a lot of times you meet people and they talk a lot about what they've done, and sometimes you guys don't get to see it. Today, Dr. Oni, myself, and Leslie, we're going to be sharing with you guys the practical aspect of this and how you and your family can actually benefit from it. What I'm going to be doing right now, I'm going to be sharing my screen. I know you guys are here to hear about the Rise apartment offering. I'm going to be sharing significant details about it in a couple of minutes. But before I do that, I'm going to share my screen here again and then show you guys some of the things we've done in the past that some of you don't have preview of. Let me open up. I'm going to log into a site called CoStar. And a lot of you that are joining here, since you registered and you're part of Excite community, the information you're about to see right now is kind of a privileged information. We're going to be logging in where you're going to actually see owner records of apartment buildings. We pay a lot of money to get access to this data, and we want to make sure you, as part of our community, actually see this information, see who owns what, when it was bought, and actually understand how transactions are being done. So I'm going to log into CoStar here. So as you can see, this is CoStar. CoStar houses all commercial real estate across the country. If you have a commercial real estate property in the United States of America, and including Canada, the data is actually on this particular website I'm about to log in. So we're fortunate enough to be in this space, and we have access and paying a lot of money to get access here. So I'm going to log in here real quick. And I'll search one of our properties. And the property I'm going to search right now, as you can see here, this data is called the View at St. Andrews, right? I'm sure some of you have heard that Excite Capital would deliver 29.97% average annual return to investors in the past. And sometimes you ask yourself, how did you guys actually do it? I'm actually showing you guys the record right now. As you can see, this asset is called the View at St. Andrews. It's a 132 units property. And if we go into the sales data, you can evidently see here that in April of 2021, Excite Capital Investment, we bought this asset for $12.55 million. And we bought it from a company called the Walden Group right here on the left, right? You can literally see the seller and the buyer, right? Why am I showing you this data? Is because before we go ahead and acquire these assets, there are a couple of things we look out for before we actually choose a market to buy a deal at. One, we look at population. We say, if we're going to buy an asset, is population growing in this area? Two, are there good schools in this area? Are there jobs in this area? Does the asset have an opportunity for we to actually make money between us and our investors? We do not bring a deal to you as an investor if we do not see that the deal have an opportunity for us to make money for us and our investors. So in this case, we saw this deal. They were selling it for 12.55 million. The question Dr. Oni, myself, and Leslie asked ourselves was, how can we add value to these assets so that you, the investors, can make money? And we went right to work. And what we did, went in, as you can see here, this property, this is how it used to look. We came in, we went ahead and pressure washed the sidings of the property, made it look nice. We went ahead and rebranded the asset from Churchill at St. Andrews to the View at St. Andrews, because the property used to have a particular brand. We were like, well, if we're going to add value to it, let's rebrand it to a more appealing name so that somebody hear about it, it rings a bell. So we rebranded the property to the View at St. Andrews. We didn't end there. So what else can we do? We came in, this pool that you're seeing right now used to be green. We came in, we made it blue. The fence, the white fence that you're seeing here used to have holes on it. We came in, we fixed it up. Now, the tenants that are living on this property, what was going on in their mind is, who are these guys that are adding a lot of value to this asset? We've not gone to them to say, hey, we're a new management, come and pay more money in your rent or any of that. We said, no. Let's go ahead and exchange value first. Because a lot of people will give you money for value. And if the value is so high, the money they give you becomes very, very insignificant. So what we do at this asset, on these assets, is we go in and we add a significant amount of value that's evident to the tenant. So in this case, we made this pool very, very, very nice. Right now, today's Memorial Day, a lot of pools across the country are opening. We try to make sure in our communities that we own with our investors, they have a nice pool. And we came in, put in a nice pool furnitures and everything, right? So those are some of the things we do. Like, for example, this particular property as well, they had a lot of kids. There was no playground. We came in, we installed a playground. This clubhouse that you're seeing right now, we actually got a beautification award for it. The clubhouse used to be a mess, but we came in, we fixed it. Again, we've not gone to the tenant to say we're going to ask you to give us some more money. We're still doing some work so that they can see it. Just like now you are seeing an asset that we've acquired, right? So we went ahead, we did all this renovation. They didn't have a gym. We put in a gym in here. We renovated about 33 of the units in the interior units. We did the exterior renovation and the interior renovation. After we were done, we went to the tenant to say, hey guys, we just spent $11,000 to $12,000 per unit to do this renovation. Do you mind paying extra money in rent? And guess what? They did not hesitate. And that's why 21 months later, the Spain companies came back and say, hey guys, I've seen what the value you guys have added on this asset. I don't mind paying extra $5.3 million for you guys to hand over the keys. And that's exactly what we did. On this particular asset, we projected an 18% annual return to our investors. Guess what we delivered? This is the asset that we delivered 29.97% average annual return. Because what we tend to do in our company is to underpromise and overdeliver. And the way we're able to achieve that, we add a significant amount of value to the communities that we acquire. This is just an example of how when you earn this 29.9% or 18%, you're able to use that extra income to, one, maybe help send your kids to good school, two, get additional income coming in, three, reducing your tax burden. Actually, I didn't mention it on this particular asset. We did over close to 40% tax savings on this particular asset. You're not just making money, you're also reducing your tax burden. And as we go along and have this conversation, please feel free to drop your questions in the chat. We're going to have this is practical. It's not like bringing up a bunch of slides and then walking you through the slide. We want to show you exactly how this has been done and how we're executing and producing returns here for our investors. So this is just an example of a deal that we bought, we added value to it, and we sold it, and we delivered a significant amount of returns to our investors. I'm going to pivot and share with you guys another deal that we just did. Some of you on this call are actually investors on this particular deal I'm about to show. So it's not new. Again, all you're seeing, everybody that's on this call, this is a privileged information. I'm giving you guys live demo of the assets, who owns it, when it was acquired, and all of the historic data so that you can see it's practical. here with us. The next deal I'm going to show you guys real quick, I know I want to be respectful of everybody. I'm not going to go into a lot of other assets, but I'm going to just show you guys a few of them. This particular asset you can see here is called Grove Park View. I'm going to open up the sales records. You can see here, Excite Capital acquired this deal in March 6, 2025, and we bought it for $49.1 million, right? Excite Capital and our partners acquired this asset, and we acquired it from the seller right here, right? So as you can see, this particular asset, we bought it at 49.1. Is it just Excite Capital that bought it? We came together with some of the investors here on this chat, and some of you that are interested in getting on it. Of course, you can get access to some of the deal I'm about to show you guys in a minute. But we all came together. We found this asset in a great market that have great dynamics. When I mean dynamics, I'm talking about jobs, school, income, crime is low, great asset management team, and we acquired the asset. And this, as you can see, this was acquired March 6th. Guess what? One thing that a lot of folks are in this call is we are high earning professionals. We make a lot of money. And when we start saving money, one of the things that comes to mind is to invest in the stock market or invest in REIT. Guys, on this particular asset, one of those REITs actually invested with us. Meaning, usually you give money to that REIT and they look for us to invest with us. There's one of our investors on this deal is actually a REIT. So we're not just now having REITs working with us to go buy these assets. We actually acquiring assets from a REIT as well. Actually, this company right here is a real estate investment trust as well. So we're working in an environment where you, an investor, can have direct access to these assets. Now, this particular deal is closed. It's no longer open for investment, but I'm about to show you an asset that you can take advantage of, an asset that you can use to build wealth. As you can see, this one was a large one, and a lot of investors came in on this one. The one I'm about to show you right now is not as big as this one, so the spots on that one might fill up pretty fast. So any of you that are interested in getting in one of these assets, please feel free. I don't know, my team, please drop a link for them to get into the portal and go in there and reserve their spot, because like this one is 49.1. This one that we're buying right now is about $25.3 million. And I'm going to be sharing with you guys here in a second. Any questions so far? Again, I don't want to just run through this. If you have questions, please feel free to drop it in the chat. We can answer any questions that you guys have here. But before I go and show you guys the new acquisition, which is Rise, which is why a lot of you are here, I'm going to show you one more data. One more very important, practical information that our investors today are benefiting from. I've shown you an asset that we bought and sold and how investors made money. I've shown you a deal that we just acquired. What I'm about to show you right now is actual money in the bank. You as an investor, the money that's been transferred to your bank account. I'll show you an example, a bunch of it. Now I'm going to, block out for confidentiality purposes. I'm going to block out some our investors' names, but I'm going to show you at least how much was invested and the returns they are getting on their bank account as of today. Just give me a second. Let me pull that up here. Meanwhile, drop your question in the chat before I go ahead and share this here in a second. Yeah, I'm about to pull this up here in a second. Give me a minute here. This one is actually, let me pull here. Guys, just give me a second. I'm trying to make sure I'm very, very careful with the share here before my CEO beat me up. But let's see here. Go back one more. All right, I think I'm at the page I want to share here. So guys, I'm just gonna share it right here. But what you can see here is distribution going out. Payment, over $100,000 was distributed to investors for that quarter. As you can see here, you see how amount invested. You see amount invested, and this is money in the bank right here. All the way. This is live data. It's not made up data. It's not a screenshot. This is live data. What does this mean to you on this call? It means you can sit down at your home, do what you love to do. Go to work, do what you love to do for work. Spend time with your loved ones, and you put your money to work for you. This person right here that have $200,000 invests for just one quarter, they're getting $3,000, close to $4,000 passively without doing anything. And this is an example of buying an asset that produces cash flow, buying an asset that produces return for you as an investor, where you don't do anything. A lot of folks today, when they think about investing, they're like, man, I have to go find the deal. I have to underwrite the deal. I have to go loan. I have to go do all of these things. What Dr. Oni, Leslie, and myself have decided to do is to create this platform for you so that you spend time today with your loved ones while we take care of the buying of the assets, evaluating of the assets, managing the assets. And guess what? And you get to get these returns in your bank account every quarter. This is an example of what we've done. Again, we've done it, which I just showed you a deal we bought and sold. This you're seeing right now is a live deal that we have here at Excite Capital that is producing this return to you as an investor. So I just wanted to show you guys some of these examples before I go ahead and show with you guys the Rise apartment that we just have under contract. Again, the Rise is a smaller deal. The raise that we have on that deal is not significant. So anybody that is interested, what I would highly recommend, please click on the link, go into the portal, sign up, create an account. And then if you have any question while we go through this, please ask questions. And then we can actually answer those questions as we go along here. Okay? Team, please drop the link on the chat for the team, for everybody to be able to go in and review it. And today I'm not going to be sharing a lot of, I'm not going to be going through all these slides. I'm going to give everybody that's on this call, today's your lucky day. I'm going to give everybody access to this particular deck, access to our portal, so that you can go in and then review it. I'm sure everybody on this call wants to do their due diligence. You want to do due diligence? We're going to give you access to the deal so that you can do enough due diligence. Just a quick story about the Rise, which is the offering that we currently have. Again, this is open for accredited investors only. If you're not sure what an accredited investor means, it means that as an individual, you need to be making at least $200,000 a year. And you must have made that for the last 2 years. If you're married, you need to be making $300,000 a year. And you must have made that for the last 3 years, or you have a net worth of $1 million, excluding your primary residence. Now, if you have retirement account or any other kind of asset, it counts towards your net worth. So that is what this particular offering is for, only accredited investor. And if your circumstances is different, please reach out to one of us, and we'll love to answer your questions. So what is the Rise? The Rise apartment, as you can see, is a brand new 2022 built deal. And guess what? The only reason we have this asset right now was because we closed on the other one I just showed you, the $49.1 million deal. And this one came off market. The only reason why we got this deal was because of everybody on this call today. The marketplace now recognizes that we have a community of professionals that are looking to build wealth. And we're here today to pool our resources together to buy this off-market deal. And when I say off-market deal, it's not because Dr. Oni, Leslie, and myself, we're just handsome. That I know I'm more handsome than Leslie, but there are reasonings behind why they feel like our community can take down this deal, because we just did, even when people are not able to buy deals in the marketplace. The only reason we were able to do that was because of our community of investors. And that's why we have this off-market deal that didn't go out to the public. They just called us up and said, guys, are you guys interested in this deal? And we looked at it. We went and toured the deals. We did our due diligence. Again, our due diligence is very significant. Again, I'm going to give you guys access to the deal so that you can see the due diligence video that we did on this asset. Is amazing the amount of work we do to bring this asset to you, because we know you work really, really hard for your money. We know you save a lot for you to invest. So because of that, we make sure we do our due diligence before we bring these assets. So this is a 128 unit property. I'm not going to go through the details. You can go into the portal, get access to the deck, and then you can review all of this information. But it's in a growing market. It was built in 2022. It's a brand new asset built in 2022. And this is the return metrics for this particular asset. This is how this makes sense to you as an investor. Let's say you have $100,000 you invest in this asset. As a Class A investor, you're making 10% of your money. It's as simple as that. That means each year you're going to be making $10,000 on your money. And that money you're going to be getting, just like you saw in the bank account that everybody's getting, you're going to be getting that 10% that is distributed every quarter. For Class B investor, you have a 6% cash flow. The distribution that you just see, if you invest $100,000, you're looking at a $6,000 that you get a year that is distributed every quarter for the Class B investors. That $6,000 is just from the cash flow. Now, when we go in on this particular deal, we're doing a light value add. What does that mean? It means we're going to go into this asset and we're going to do like a tech package. We're going to maximize the income from the pet. We're going to put in valet trash to increase revenue. We're going to maximize our income from the asset. When we do that, we're able to increase the value of the asset. So when we do that and we hold for 5 years and we sell, we're going to make a profit. When you add the profit that we make at the end and the 6% you're getting for Class B, that's what gives you an average of about 16% that you're going to make on this asset. So imagine you invest $100,000, you're looking at making about $16,000 a year on your money. Again, this is 100% passive. You don't have to lift a finger. The only finger you need to lift is actually click on the link right now and get yourself access to the portal. That is all the fingers that you need to lift. Other than that, or you go ahead, you want to visit the asset, just let us know. We'll set up a meeting for you to get on the asset, and you can actually go in and visit the asset. Adi, if you don't mind, can you share the video of the asset, the due diligence video that we did on the asset, so that people can actually see it as well, how the asset look and feel?
Yeah, give me.
Thank you so much.
Pulling it up. All right, here we go.
And I see the questions are coming in. Please keep the questions coming. And definitely we'll jump in and answer those questions here, okay?
We're here in Conyers, Georgia, 128 unit, the Rise Apartments. We're going to be taking this down with a group of investors. That could be you too, so come join the ownership group of this amazing asset.
Let's go, let's go, let's go. Hey, listen, if you're on the sideline, get in, because we're taking this down. The Rise Apartments, you got it.
We're here for due diligence. Today's day 1 of 2. And as you can see, brand new 2022 property, 128 units, amazing. Roof looks good, landscaping looks good. Looks like a really clean property. Not just inspecting the property, but also inspecting the neighborhood as well. We want to see what's going on in the neighborhood to make sure that there's enough opportunity here.
We're going to be going through the financials of the property, scrubbing it line by line to make sure that everything matches what we've been told. That includes the rent roll, the T12, the income statement, expenses, all that stuff.
Hey, listen, if you're trying to buy a property, you have to do this. They have to come here, inspect every single aspect of the property. I'm talking about the roofs, the HVAC, even this right that you're seeing right here, the lawn, the grass, everything. Somebody needs to come and check it out and let us know if it's something that we need to spend money on.
Because we have to walk through every single unit. We have the roofers, the environmentalists, the plumbing. They're gonna do all their due diligence to make sure everything is on par with our underwriting. Built in 2022, looks beautiful. I've been around the building, looked at some of the units, looked around. I love what I see in the parking lot. And one of the things I love doing is going to see the dumpster area, because that usually tells me the kind of tenants that we have on the property, whether we have responsible or irresponsible tenants. And the dumpster area in this property look really clean. That's my hack. Some of our investors and long-term partners are here with us as well. So because our philosophy is to show you so you get to see it. This is not just about investing, it's about buying assets, holding properties that create value for you. So you're talking about limited supply coming online. It's a brand new property, low CapEx. We got potential to increase rents in the next coming years.
Thanks, Adi. Appreciate it, Adi. Guys, listen, we do all of that so that you don't have to do it. That's the reason why we spend all of this time. And guess what? We could do all of that work. And if the asset doesn't check all our boxes for you, our investors, we do not bring the deal to you. We actually pass on it. We spend that capital upfront and say, okay, if we bring this asset, are we going to invest our money in there? Are we going to invest our kids' educational money in there? If the answer is yes, then we'll go ahead and buy it. And that is the kind of opportunity that you have right now. And this one is a brand new asset, one of the best assets that we've seen since we started the company. And today, you have an opportunity. You are one of those people that have an opportunity to be able to partake on that asset. So what we're going to be doing right now, I know there are some questions that are coming in right now. We're going to answer some of those questions. But what I'm going to do right now is actually I'm going to give everybody that's on this call access to the deal. And then once I give everybody access to the deal, we're going to go in. I'm going to walk you guys through how to actually look at the deal deck, which is like all the breakdown of the deal and all the information about it. I'm sure a lot of us here would like to do our due diligence. This is exactly how we do it. You do a detailed due diligence on this asset. You're going to go in, you're going to see your subscription document. You can review it. And also you have an opportunity today to reserve a spot. And then while you complete your due diligence. And once everything checks, funding is the last part of this whole process. Today is for you to get access to the deal, review it, and then we can go through it. So without further ado, please, if you're on your phone, if you're on your computer, please click on the link and let me walk you through how you can get access to the deal document, and then we can go from there. And please drop on the link in if you've clicked on the link, and then you see you have two options. You have one, sign up, and then you have one, sign in. For folks that have not gotten access to this portal before, you want to click sign up. And then you'll be able to create an account to get access to this portal. Again, it's a secure portal that holds all our investment information. So please click on the link and then click on sign up, and then we'll walk you through how you can get access to the deal documents here. And please continue to drop the questions. I'll let Leslie answer a lot of these questions once we start answering questions here in a minute. Stop sharing. Click in if you've signed up. Just click in, and then I'll walk you guys through it here. Okay. So Patrice, just going into the portal, and then I'll show you exactly how you can review all of that information. Yeah. Thanks, Yvonne. Again, funding is the last part of this process. What you're doing today right now is just to get access to the deal so that you can go ahead and do your due diligence on the assets. And then you can fund after you finish your due diligence. Let me see here. So where is that link? All right. I see Yvonne says in. Okay, good. So once you log in, again, it's very important that you go through this process with me. Once you log in, you're going to see dashboard on the left. You want to click that. And then once you click the dashboard, you're going to see a couple of the deals. We have the Rise and we have Grove. The one that you're interested in is the Rise apartment. Then you're going to click the Rise apartment. And after you click the Rise apartment, you're going to see a breakdown of every information on the deal. On the right, you're going to see Invest Now. And that's where you reserve your spot. And then after you reserve your spot on the deal, you come back to the dashboard, and then you'll be able to see a bunch of information about the deal. You'll be able to see that this due diligence video I just shared with you guys, you'll be able to see there. You'll be able to see the investment offering memorandum, which gives you a significant breakdown of everything about the deal, why we like it, the location, the key metrics that we look at when we're acquiring these assets. You're also able to see the private placement memorandum, which is the document that shows your ownership of the asset. You're able to see that information as well. And then you'll be able to see the market, some data about the market, how much you are acquiring the deal for, and all of that substantial information for you to complete your due diligence. Leslie, do you want to go ahead and answer some of these questions that they have? We have here while people go through that and review that information?
Sure, I'll be more than happy to. You can bring up the questions. Question from Leia: any improvements you plan on making? What is the occupancy rate? This is a great question, Leia. The occupancy rate on the property right now is about 93.7%, which is very stable. So as far as improvements, Tenny mentioned the tech package that we're going to be updating. So we're going to be adding like smart locks, smart thermostats to all the units. We're also going to be adding a fence across the unit. So one of the things we notice in this property is the city is expanding the road that passes by this property. This property is located not too far away from I-20. So the main road that passes in front of this building is currently 2 lanes on each side. That's a total of 4 lanes. The city is expanding that to 4 lanes on each side because of the traffic, the increase in people that are moving to this area. So we're going to add a privacy fence from the property to that road, just to give our tenants a little bit more privacy. And so this is some of the improvements we're making. The property itself is already doing really well. The current owner had to give a ton of concessions when they were leasing up this property. Now that the property is stable and the market is growing, we'll be able to phase out a lot of those concessions. So this property comes with like innate opportunity in it. So this is a really good one that starts producing from day one. Is the 10% rate for Class A always a guarantee? That's a good question, Patrice. We never say any returns are guaranteed when it comes to investing. Now, with this asset, the Class A equity that has been reserved for Class A, it's a small piece of the equity. Of the $13 million in the equity, about $500,000 is reserved for Class A, and you get your 10% first. So the property is already producing way more than enough cash flow to satisfy that 10% in Class A equity, even after paying like the preferred equity return. So you're going to be getting your returns as a Class A investor. You're going to get your returns first. And the property is already producing way more than enough cash flow to deliver on those returns. So while no returns are guaranteed, the position you occupy on the capital stack gives you a lot of favorability to get your returns on time. So Class A investors going to get their returns, the 10% from day one without any issues. But they don't get to participate in the appreciation on the back end, which is where a significant portion of this returns exist with these assets. So how do you determine the return rate on each on investment each quarter? Return rate on investment each quarter. That's a great question, Patrice. Again, so what we do for our investments is like we do add something called a preferred rate of return. So that preferred rate of return is like, as an investor, you are entitled to a minimum of that return rate every single year. For Class B investors, for the RICE, the preferred rate of return is 6%, which means you are entitled to 6% from the cash flow every year. So if for any reason, which is not unusual, we do not meet that 6%, let's say year one, the balance gets carried over to the next year and to the next year and to the subsequent years. And when you go to the investor deck, which you're getting access to right now, Patrice, in the portal, you're going to see the page where it breaks that down on like what our projected cash flow is going to be for you as an investor year one, year two, year three. We tend to be very, very conservative, very, very conservative when it comes to these numbers, because we rather under promise and over deliver than set expectations high. Then when you come in as an investor, you're not getting your returns. So you saw Tenny show the example of the asset that we're distributing cash flows on. We are actually way ahead on the cash flow for that asset than what we projected. So that 6% is what you're going to be getting on a quarterly basis. And if for any reason we do not meet that 6%, the balance gets carried over to the next year, to the next year. And on that deck is broken down the estimated returns that you're going to be getting. So you could take a good look into it as you review through that.
Before, as an investor, how do you make money on a deal?
So it's opportunity. It's all about the thing about this asset is like you're buying a business, right? So that's one of the things we love about multifamily investing is like we're buying a business. This is not just real estate investing. So, and the way businesses are valued based on the income that they generate or the income that they create. So we identify businesses that have opportunities for us to increase the income over time. That's how we make money. So we identify businesses that are already producing a significant amount of income. And that income, after we pay all of our expenses and pay our debt, which is the mortgage, the business is producing cash flow that we could distribute to all the owners, which includes you, our investors. Then in addition to that, that business has to have a path for us to be able to increase the valuation over time by increasing the income. How do we do that? We identify markets that are growing, where the population is growing, where demand is higher than supply. You want to look for that demand-supply imbalance. So when you are in a market where there's a demand and supply imbalance, you have the opportunity to be able to increase your net revenue by increasing the income through rent increases and other increases, because when the demand is high, your prices can go up. So that's how we're able to increase the value of these assets over time while still receiving cash flow from the income that comes in every month. So the great thing about these businesses, guys, is you're acquiring a business that has customers that sign a contract to pay you by the 5th of the month for 12 months. So it's not like other businesses where you have to be searching for customers every month. A lot of other businesses are copying from the rental business and trying to do all these memberships and all of that. But that's the great thing about real estate investing. You're acquiring a business that caters to a core human need, and that your customers actually sign a contract with you to be customers for 12 months. So that's how you make money on the deal.
And before you move on to the next question, one other thing I was going to add there too is this. Guys, just think about it. Everybody in America today, if they earn an income, one of the first things that they put their money aside to do is to pay their mortgage or pay their rent. And we are buying assets that these guys set that money aside to pay to first. They can decide to say, I don't want to go to Chipotle. I don't want to go to Starbucks this month. But the rent, there's no option. They're paying it. And that is the kind of service that we provide, where the money that comes to us is a priority for all the tenants that are living in there. So that is a powerful business to own, because it's like Leslie said, it serves one of the core human needs of everybody that's living. All right, we have the next question. Go ahead, Leslie.
The next question is, do investors have the power of decision? Like if after 5 years you want to sell the property, but me as an investor, I don't want, what happens? So as an investor, you are
That's a good question.
Partner. That's a great question, though, Frankie. As an investor, you are a limited partner, so you're not involved in the decision-making process. We do, where we getting ready to watch the market, we're looking at things, we kind of notify investors, this is what we're looking to do. If at that point you don't want to take your gains out, what we've done in the past is like we've done a 1031 exchange where we've been able to roll over those gains into another
Hold on,
property.
deal.
So we try to look for deals right around that time that will qualify for us to roll over the gains. But if not, you get your money back, and then you can move it to other assets as well. So yeah, as an investor, you're not involved in the decision making process. But what we're building here is a community. We're not investing in one-off assets over one-off assets. So we are here to serve our community, and we always try to position ourselves in a way that our members who don't want to move away with their gains will be able to roll over to the next asset. Do you have a rainy day fund? How much time do we have to invest? Of course, yeah, we always do. We follow the 3 immutable laws of real estate investing, which is number 1, we buy for cash flow. Number 2, we get like a fixed rate debt. And number 3, we have adequate reserves, or in other words, a rainy day fund. Because like the words of one of my favorite philosophers, Mr. Iron Mike Tyson, everybody has a plan until you get punched in the face. So if you go into these investments and you do not have reserves to deal with the uncertainties that might come, you might run into trouble. So we always raise enough capital to hold in reserves, which is all part of the equity that we're raising, and it's all calculated as part of your returns as well. And how much time? We are closing on this asset on July 8th. Deadline to fund is June 20th. Like Tenny mentioned, the equity is quite small. We already got, I think it's right now over about $7 million in commitments that have come in. So it's going to fill up fast. So anybody that's ready, that's on this call, click on the link, reserve your spot so that our team can work with you, answer any questions that you have, and get you, give you any help that you need to fund and secure your position. Why is the current owner selling, and how long have they had the ownership? That's a very good question, Reg. So we are entering into a phase of the real estate cycle where we are getting a significant amount of opportunities at discounts. So what is happening right now in the commercial real estate space, which a lot of people don't know about, is similar to what happened to residential real estate in 2008. A lot of commercial real estate investors are calling it the 2008 of commercial real estate, because if you know anything about what happened in 2008, they were talking about the subprime mortgage crisis, where people just got mortgages, high leverage, and they could no longer afford it, and they had to foreclose on their properties. Guess what happened between 2021 and 2022? Interest rates dropped to 0. A lot of lenders stopped issuing out loans. It came in opportunistic lenders, just like the subprime lenders back in 2008. But these opportunistic lenders in commercial real estate were giving out floating rate loans. That is, loans where the interest rate increases according to the market. And if you've studied interest rates over the last 3 years, you know what has happened. So interest rates on properties like this went from 3% to 9%. So you're holding on to this property, your debt cost, which is about 70-80% leverage, tripled. So this owner actually bought this property before even having tenants in there for $24.2 million. And now we're buying it from him for $25.3 million when it's filled, stabilized, and producing income. And the reason for that is because he is one of those that had the floating rate debt. He has tried to extend it, and the lender is like, no, I've already made enough money off of you. I'm taking this asset and I'm selling it back. So they were either going to go to 0 or walk away with a little bit of money, which is what they're going to be doing when they're selling it to us. So the lender is actually forcing them to sell, right? So it's a loan distress asset, very stable asset, nice property, brand new, good location that's growing, but it didn't follow one of the immutable laws of real estate investing, which is buying for fixed long-term debt. So that is the reason why they're selling, because their debt cost has gone haywire. And if you are part of this community, listening to this right now, or listening to the recording, guys, this is the moment that we've been working really hard for, right? If we missed out in 2008, we're not going to miss out in 2025 going to 2026. this is the moment where we're going to be able to acquire these assets at significant discounts. We started it with Grove Park View, which was appraised for $60.7 million. We bought it for 49. This one is another one that we're buying at a discount. We'll buy the assets, stabilize them, hold them over a period of time, and create massive amounts of wealth for all of us in our community. So that's the reason why he's selling.
And Reg, another thing that you might know there is this. The broker called and say, I need somebody, a company that can perform. And when they say a company that can perform, it's not just me, Leslie, and Julius. It's us as a community. They see that we've done it in Grove when nobody was able to do it. And that's why they give us this deal off market. That is what it is. Like you guys, I think you guys have the capability of closing this deal because the lender was on the neck of this seller to sell. So because of that, I'm going to award this deal to you guys because I know your community is strong enough to take it down. And that's what we're doing here. And again, this is a brand new deal. This is one of the best deals that we've brought to our investors. And you guys are taking a dip at it right now. So please go in, get access to the deal. And as you all know, we're always available to answer any questions that you have so that you can secure your spot on this deal. Go ahead, Les.
Is it possible to sell my shares and cash out my money? And how is the actual value of my money calculated, let's say, after 3 years of investing? Good question, Frankie. So unfortunately, this is one of the downsides of this investment. It's an illiquid investment, which means that once you put your money in, the expectation is that your funds stay into the end of the business plan. That's when you really make a lot of money. So this is an ideal investment for that long-term money that you're looking to grow over a long period of time. This is not like a quick turnaround kind of investment. So long-term investment with tax advantages, but that grows significantly in a much more predictable manner over time. So, but if for any reason during the investment you have an emergency or something you need to exit out, the process is you usually sell your shares to another investor. We've helped facilitated that exit for some of our other investors as well, where they're trying to exit in the middle of the business plan, and we've helped. Sometimes we buy it ourselves because these are great investments that we'll hold on to over time. And other times we offer it to the current investors in that particular entity, and a lot of times they usually scoop it up and they're able to take over the investment.
Please keep, these are really good questions. Keep the questions coming. And if you're having any challenges getting access to the portal, please let us know. We'll make sure that you're straight on that regards. Again, this is an opportunity for you to go and see the back end of the deal, do your due diligence, and if this is a great deal for you to get in at this time, get in. Again, you can with cash or you can invest with the old retirement account. If this is not a good one, please let us. And you can say, okay, this is not a good one. I'm going to do the next one, but we know this is a good opportunity for you to grow wealth, and now you have access to it. Brand new institutional grade assets for you and your family to actually get that dream cash flow that you've been thinking about.
It's a new question.
And then there's a question right there. Is the benefit make every quarter is taxable?
Yes, that's a good question. Is the benefit made every quarter taxable? That's a great question. Yes, it's income. Traditionally, with incomes from these investments is taxed at a capital gains rate. But the beautiful thing about this asset is you're going to get a depreciation loss. The tax cuts have already passed through Congress, and if it goes through the Senate and the tax cuts by Trump tax cuts gets extended, $100,000 investment, you're going to walk away with about $30,000 to $40,000 in depreciation loss. So what does that mean? That means that your paper loss is going to be higher than your cash flow. So in essence, your cash flow is tax-free, because if you're making $6,000 a year in cash flow and you have a $30,000 paper loss, that loss offsets your cash flow, which is the beautiful thing about this asset is like that tax benefit that you get, the depreciation loss. And that loss, you get $30,000, $40,000 in paper loss year one. You don't use it all of it year one. It doesn't go away. The balance stays. You use it the subsequent years. If you have gains from the stock market or other passive income, you could apply that depreciation loss to that as well. So while we talk a lot about the returns, the cash flow and the appreciation that you get, you also get $30,000 to $40,000 back in your pocket in savings. and that is not even factored into the returns.
Returns.
This is money back in your pocket in addition to the 16% average annual returns that you're making.
So when people
I
say,
think it's important to note that when we say paper losses, it's exactly what we're saying. It's losses that are not real losses. It's just losses on paper. It's like depreciation. It's what you used to write off taxes that you were supposed to pay. It was one of the greatest discoveries for me in real estate. It's transformative, and I think any serious investor needs to also include in their portfolio assets that allow for significant depreciation and better tax planning.
and for folks that don't understand what depreciation means, it means when you buy a property, I'm sitting on a chair right now. I have a desk right now. I have a microphone here. When you buy the asset, you buy all of those things with the asset. You get to depreciate all the value of all these things that's in the property, excluding the land and the structure. So it's not your money that's being depreciated, it's the structure, the property itself, and all the things that comes to it. And because you are an investor in that asset, you get to benefit from the depreciation from all of those components of the asset, and that would pass it to you as an investor, so that you can reduce your tax burden. The goal is not to just make a lot of money. The goal is to actually make a lot of money and also keep it. And real estate helps you keep a lot of that money that you make as well. Please keep the questions. These are really good questions, guys. Keep the questions coming.
So far, we have had the questions we already answered. I'm looking at LinkedIn and YouTube where we are live as well. I'll post some questions if I get, but so far that's all we have.
Thank you so much, Adi.
Yeah, I think, if that's all we have, then it's very possible. We have only about 3 minutes left. Is there any additional questions?
And for those that already went to, I see that some people have already gotten the portal already and started going through the subscription. Please reach out if you get stuck anywhere. My team, we're all here available to help answer any questions that you have. It's pretty straightforward, but if you get stuck anywhere, feel free to reach out. We'll be able to help you navigate the process.
Excellent. Beautiful. Yeah, that was an incredible presentation. Look at this. Frankie wants to bring the entire 20 something million.
Why are we
Frankie? You know what? Game over.
That's a good question, Frankie. Unfortunately for this, the most you can bring is 13 million. That's the equity. 24 million is 25.3 million is the total purchase price. But you can bring in the 13 million, 13.1 million as an investor. But yeah, why not?
Frankie will not give you all the 13 million. There are other people on the call too, all shared. That's why we're bringing this asset. You know what we'll do? We'll spread it. We use some for this one, and then have other people come in, and then we'll go buy another one together. How about that? So that you can diversify.
Yeah, Frankie, bring the 24. We'll find deals to put them all in. Don't worry, it won't be all on Rise. We'll help you diversify your 24M.
And Leslie made a very important point, guys. One very important point Leslie made was, this is like 2008. The difference is in 2008, we did not have access. Guys, this is a brand new 2022 built $25.3 million deal off market that they brought to us and say, guys, I know you can execute on it. That's why I'm bringing it to you. So Frankie and everybody that's on the call, we have an opportunity to get more of these kind of assets, where in the next 5 to 10 years, all of us that come in together to buy these assets we will be able to significantly build wealth in addition to reducing our tax burden significantly. So this is a very important time for all of us here because we have access. In 2008, we did not have access, but now we do, and the marketplace know who we are, know who this community is, and is saying, guys, here's the plan. This is a brand new asset off market. You guys take it down. And more of them are just being stacked up. So let's work together, take this one down, and then we're going to get to the next one. Chairman, I relegate the floor to you.
Thank you so much. I really appreciate it. You're on fire today, Kenny. Really appreciate you. But the rest of the people on the call, for everyone else on the call, we realize that you could be anywhere else in the world, but you are here with us. It means the world to us. We appreciate you dearly. For those people that have already gone into Cashflow Portal and are already securing their space on the property ownership group of this deal, The Rise, we want to say a special thank you to you. Thanks for joining us. It's because of people like you taking action that we've been able to do the incredible things that we've been able to do over the last several years. It's because of people like you that we've been able to help people get passive income, that we've been able to help busy professionals do the things that they love while they're still making or generating income on the side by investing in deals like this, by joining us on property ownership groups like this. So for those people that have taken action, we thank you from the bottom of our hearts. For those people that are still thinking about it, feel free to ask us more questions. That's what we're here for. We look forward to you joining us in this property ownership group. And we wish you a fantastic and happy Memorial Day and a great rest of the day. Thank you so much, everyone. Au revoir. Bye-bye.
Thank you so much, everybody.